Hi, I'm Paul Mulholland and welcome to this presentation from HMTV. This one's about some of the tax and other implications of incorporating your business. If you've been operating as a sole trader or partnership, you may have given some thought to the idea of going limited. Perhaps you've had some credibility issues with big customers or suppliers because you don't have limited in your name. We operate our business as a partnership, and it continually annoys me to get requests for lists of directors, or even worse, a set of our audited accounts. Come on, do they know nothing? A lot of our clients would think of incorporation for tax reasons. After all, sole traders pay a lot of tax at 40% sometimes, where small companies only pay at 20%. Sounds like a no-brainer, doesn't it? Well, let's have a look at an example. Mr. McCauber operates as a sole trader, making profits of $80,000 per annum. He draws out $45,000 to live on. He pays a lot of tax at 40%, and his total tax and national insurance liability is $26,000. He's not too happy about this amount of money going to the tax man, and when he hears that companies pay tax at a lower rate, he decides to incorporate. His long-suffering wife Emma insists that they have the same standard of living that they had before. So he arranges for a salary of $45,000 net to be paid to him. He's horrified to discover that with the amount of tax and national insurance the company must deduct from his salary, it needs to be a gross of $66,000 to leave him with that net $45,000. Even worse, the company has to pay employers national insurance on the salary of over £8,000. And while the company's tax bill is very small, the overall result is that between himself and the company, there is over £30,000 per annum going to the taxman, even more than he paid as a sole trader. In Mr. McCauber's words, result, misery. So much for incorporating to save tax. So is there anything we can do to improve Mr. McCauber's situation? Well, the secret is in how he draws his money out of the company. As the sole shareholder of the company, he can arrange for dividends to be paid to himself instead of salary. Dividends are taxed quite differently from salary, and most importantly, they don't attract national insurance. So let's have a look at the example again, substituting salary for dividends. If he takes a small salary of $7,000 and dividends of $40,000, his personal tax liability drops to $2,000, leaving him with the $45,000 to live on as before. The company pays tax of $15,000, so overall $17,000 goes to HMRC, a lot less than the $26,000 he was paying as a sole trader. To quote McCauber again, result, happiness. Now that's much more like it, but let me show you something really great. If he takes a bit less out of the company, a total of $38,500 made up of $7,000 salary and $31,500 of dividend, what do you think his personal tax liability is? Well, on the way dividends are taxed, whenever he does his tax return at the end of the year, his liability will be a big fat gypsy wedding, zero, nil, nothing. $38,500 taken out of the company and not a penny of tax to pay. How cool is that? And there's another little tax benefit potentially of incorporating. In the right circumstances, if you have a successful business, you can sell the goodwill of the business to the company. Extract the money out of the company and only pay a very small amount of tax on the transaction. But that's for another presentation. Of course, tax isn't the only implications of incorporating. There are many others. One thing about having a limited company is that your accounts have to be filed at company's registry, and people can then look online at a very small cost at your accounts. So you can find your customers, your suppliers, your neighbours and your family looking at your business accounts. Also remember that the limited company is a separate legal entity. So the money in the company's bank account is the company's money, not the shareholders' money. So if you just lift the checkbook of the company to write a check for that new plasma TV for your front room, you might find you've got some nasty tax consequences. I hope you found this presentation useful on HMTV. If you are thinking of incorporating, please come and talk to us. And don't forget to check out some of the other presentations on our website. Thank you.